Hello everybody, this is Matador from freetradingvideos.com. It's Monday, October 5th, 2009, about 8:30 a.m. Eastern Standard Time, and we're having a little bit of a gap up this morning on the S&P ETF, the SPY symbol. So nice little gap up, pull back right to support. But if you look at this in a larger time frame, on a higher time frame, it's just a tiny little blip right back up into a resistance level. There was support. It got broken right through this area of 103.50. 103.30, real big kind of a ending to a sell-off that we had seen over the last couple days. And again, if you look even closer at a 60-minute chart, it really is just a bit of a blip up here. So we're watching for the ISM Services at 10 a.m. Eastern Standard Time for September. See how the markets digest that news after a multi-bar run down through support. And again, you can see on a daily chart where we are, kind of been tearing this apart for so long. There's a lot of lines on here, but it's not too messy. Still double top, lower swing high like we talked about, and a pull back to this gap area back in here. Not too bad to have that filled, but now we are below the 50 MA just slightly at the open, and then we kind of came back up and closed just right at it. So we're watching to see if we can hold this gap. If not, a good target for this market would be the $100 mark. And even the swing low is here. It's going to hit the $100 mark first, of course, unless we get a gap in there. And that will be something to watch out for, the century mark for support. Of course, we could oscillate. I'm looking for a swing low now to be put in. And if we get one, we'll have to note that that will be losing momentum as well on an even higher time frame, like a weekly chart, which we'll look at in a minute. That this swing low, we would have needed to have had a swing low in this area here to maintain that slope. It looks to me now that this has been damaged. No matter what happens, even if we head back up and do a huge retracement, we'll have to take note of this and realize that we have a better chance of making a lower swing high out of this, unless we get even another down day. So weekly chart again, we have been talking about this. Beautiful run up, another swing high, many swing lows through here. So on a higher time frame, if I was going to draw a trend line, we're still in the range of where a swing low would maintain an uptrend. And we could do and achieve the same thing by doing this. Right, there's your daily chart. So let me drop that in here and show you the difference. Right. And that would be right where we're getting close to now. So a couple different ways to note this. One on a shorter daily chart and one on a longer weekly chart. So these are both relevant areas of support. Just one would be damaged on a daily chart by X%. One would maintain the weekly pattern, looking for a higher swing low, consolidation, maybe even a high base breakout, and we could shoot for the 110 mark and the declining 100 MA on a weekly. So from very short term, looking at a 3-minute chart, all the way out to a weekly chart, again, just trying to get a lay of the land, depending on what kind of time frame you're going to trade on, is an important thing to do. And even if you're not going to trade one of those time frames, it's nice to have that in your camp. So look at the internals today, of course. Make sure the VIX, the trend, and the trend Q, even the tick, if you're looking really short term, will all match up with what you're doing. And trade safe, trade well, and I'll talk to you around noon. Thanks, everybody.